guys to the channel, and on this video guys we are going to be breaking down today's NFP news and how did we trade it through technical analysis. Now first and foremost, we needed to check and analyze the trend, which was pretty much bullish at the time, right? We had this series of lows and highs right here being created, right right there. So pretty much before the news, our anticipation was based off the idea that since it's a bullish trend, right? Perhaps we were going to price was going to come here, right? Bounce off of this zone right here, this area of demand, and go bullish from here and take out the highs. Now that doesn't necessarily have to happen, right? Now as you can see, right, what happened is the absolute opposite of it. Now just because that we were wrong on the on this higher time frame bias doesn't mean that we had to take a loss, and of course we didn't take a loss, right? So we go back into the intraday time frames, and what do we see? So let's make this a little bit big and see how did we actually come to this analysis right here. Now so price had this bearish move, which formed the high, the low, the high, the low, and then this intermediary high, right? That came down to be broken right here by this high to create this low. So from there, so you can just take this out and take this one out, right? So from there, we were, of course, in the intraday time frame, we were in a bearish market with this break of structure right here. So from there, we were now certain that come on, okay, there, right, with that break of structure right there. So from here, I was most certainly that what price would do was something like this, right? Since we had this this thing here, right? So let's go back to the 30-minute. I guess will be an accurate area, right? So we had this area here, this potential area of demand right here, in which perhaps we could have seen, since NFP is a very strong news, we could have seen a double endorsement move happening, right? And what do I mean by a double endorsement move? A double endorsement move is basically that move that price tends to go into one direction, leave a very strong wick, and then proceed with the other, right? That happens during news, and especially these very strong news. So from here, I was basically expecting a sell into this zone and a potential buy from this zone towards the highs. Now lo and behold, before the news, right, so we're just sitting in this bearish market here where we needed to seek for bearish entries parallel towards this area here, and from this area now we would then reevaluate our analysis and combine it with the fundamental outcome on which price direction is heading. So from here, we needed to take now this entry through technical analysis. Now, as you can see, right, what we do is always what we do. So from this break of structure, we had the high and the low. Now from here, we had this area of supply that needed mitigation. So price from here comes up, takes out, mitigates it, right, and then goes down. Now when we drop down, we can see that we had this area here that was pretty much not yet tapped, right? This area here, boom, right, which is the actual last buy before the sell. This little the little white candle in here, right? This white candle in here, that was the most potential area where smart money bought the buy to sell, right? So this area was pretty much unmitigated yet. So we presumed that this high right here was just holding what? Liquidity, since it's a swing high, right? So we just presumed that this high right here was holding up liquidity. So from there we saw price come down, take out this liquidity here, and then gave us that markup again. Now without this mitigation right here, there were barely no entries, right? So price comes here, right, and as you can see the time, this is like 15 hours 45 minutes, and the news was at 16 hours 30 minutes, right? So this was before news, right? Everything done here was before news. So price comes and mitigates it. Okay, so from this mitigation now, let's see how did we get our entry. So from here, let's make this a little bit bigger once again, like that. So from here, so price comes in with a bullish move, right? A high, a high, a high, a high, I mean a high, a low, high, high, higher low, and then let's take you a little bit there, and then we have a higher high right here. Now lo and behold, look at what price does. So price comes down and takes out this higher low, which is a what? That means this is a break of structure. So we now have a higher low being taken out. Boom, right there. So that's a break of structure. Now from this break of structure, what do we see, right? Price comes in, what is that thing? Price comes in and makes a low, right? Now, when we see, where's the last potential buy move before the sell, right? So we had two areas, which was the intermediary one and the original one, right? So these were both very good areas for entries, but I myself, I decided to stick with the original one. So I eliminated this and remained with this original order block, which was the one that initiated the whole move. So from that area, I was simply waiting, right? I had this horizontal ray right here, and I had an alert on it. So price comes here and starts playing around. So this is now 16 hours, right? So this is the 16 hours mark, 30 minutes before news. Price starts dancing here, creating what? Liquidity, right? So price is just building up liquidity. As you can see, it's living up trendline liquidity in both sides of the market, right? We can see we had this trendline liquidity here, and also this trendline liquidity down here, right? So it starts building up this range, and from this range we now know that there's liquidity on this side of the market as well as liquidity of that in that side of the market. So this is just a simple, this is an extra ingredient that just shows you that price is very likely to come and take out these highs and mitigate this area right here, because of what? There's liquidity here and there's liquidity here, and that's what price actually does. So price comes and hits our zone, right, taking up this buy side liquidity, and after hitting our zone, right, so this is the zone right here. As you can see, I had this crazy RR on this trade, right? So from here, this was our entry being triggered, right? And how do you if in case you don't know, how do you analyze or how do you count these pips in this gold pair? So you simply just move this decimal point one stop back. So this 65 now becomes 6.5. So this was a basically 6.5 pip stop loss, right? My stop loss was supposed to be just at this high, but I allowed extra for liquidation, because it was, you know, during move and it's gold, there's a lot of liquidation in this pair. So I just allowed an extra little bit for liquidation in terms if price was gonna wick before it to collect liquidity resting above this high, so that I could still be in this trade. Now price triggers my trade, comes, so the buy side liquidity is now taken, and price comes down, takes the sell side liquidity, giving us this re-entry, and then boom, that's the nose candle right here at 1630, which goes all the way down here. Now price from here now obviously came out and took out this low right here, but with news confirmation, since the news came out as USD being bullish and strong, so there was no need to look for buys in here. So this zone was actually omitted in the end. So from there, we now know that we have a trade and we have our stop loss. Now the next thing is to look for take profit targets. So in big news like this, from the way I have analyzed this news in this pair, how gold works is that in big news like FOMC, CPI, and FOMC, I mean NFP, CPI, and FOMC, right? Gold moves around 300 to 500 pips based on the strength of the news, right? So from here, I could just set up my my targets. So the first take profit target was at 300 pips. So 300 pips right there. Boom, right? So I was just looking at these horizontal rays. I just deleted them, so you know my take profit targets have all been hit, and it is what it is. So boom, that was my first take profit target, and then the second take profit target at exactly 400 pips. So 400 pips was somewhere here, right? So let's make it an exact 400. Boom, right there. So this was my second take profit target, and my last take profit target was at 500 pips, which, as you can see, is exactly where this trade actually ends. So let's take you all the way to 500 pips, 500 pips. Yep, so somewhere there, right? So that's 501 pips. It was actually here, right? As you can see where this trade ends. Boom, right here. So this was 500 pips, right? It's written 5,000, but as I said before, you just move the decimal point one step back to make it a 500 pip take profit target, which makes this whole trade as a 1 to 76 RR trade, right? Guys, this is the biggest RR trade that I have had in this entire year since the beginning until this is just February. So, you know, it is what it is. We'll continue milking these markets with the guys in the community. And I hope you enjoyed the video, and I hope it was really informative to you. And of course, if it was, then don't forget to hit that like. Of course, subscribe to the channel, turn the bell button on for notifications on a daily basis, because you know videos get released on a daily basis, guys. This is 2023. Stay safe, everybody. Have a nice trading week, and of course, peace out.